why don't we start with a quick update on Bitcoin?
Last week, we had $2.3 billion of inflows into all of the ETFs.
Not quick to jump that the outflows are on gold is because of the inflows in Bitcoin.
Bitcoin miners who really started selling treasury management going on right there.
Great insight.
Tether is under $100 billion of market cap. USDC is about $27 billion, but it accounts for about 70 to 80% of transactions on public blockchain. The proliferation of DeFi is good for the dollar.
UPI system of India is truly world-class.
34% of the active addresses that are transacting weekly, it's almost $45 billion of Tether. Nearly half of that is on Ethereum. Tether is primarily a Tron phenomenon. Tron is number 11 in terms of market cap. Tron is actually like the number one blockchain in terms of active users.
Wow.
More, daily active users than Binance, and they can receive something called like bandwidth and energy, funky tokenomics for developers, which is pretty low for a layer one network,
which has the most active user base. Welcome everyone to the Rundown Podcast, the go-to source for all things crypto and on-chain analysis. I'm Shiv, and joining me is our friendly neighborhood on-chain analysis expert, Michael Nadeau. Michael, how have you been? I know today we're going to be deep diving into the world of stablecoins and taking a closer look at Tron's recent activities, because for the last 1 week, I've seen you posting only about stablecoins and Tron. That's what you've been nerding about. So welcome back again. Good to see you.
Good to see you as well. Good to be back. I think that was a new intro. So great job. I didn't even know we were getting a new intro today. Great job. Yeah, it's good to be back. I think we're on episode 15. And yeah, we're going to talk about stablecoins today. I've been doing a lot of research over the last few weeks, looking at some different blockchains, looking at Tron as a blockchain. I think it's easy to get sort of siloed into focusing on Ethereum or Bitcoin or Solana. I think even in the West, that's sort of the view that these are the important blockchains. And, it's important to remember that there's like 4.5 billion people that live in Asia, and their preferences seem to be with these other blockchains, such as like Binance, more centralized blockchains, I would say, like such as Binance and Tron. So yeah, we've been doing a lot of on-chain data research on Tron. So 92% of Tron's usage is stablecoins and Tether in particular. And so, yeah, that sort of led to the Tron reporting almost turning into more stablecoin analysis. So yeah, excited to chat about stablecoins. I think this is a super interesting topic just in the world of like payments and what this means for the dollar. We can talk about how stablecoins really kind of look like this new emergence of the euro dollar market. So yeah, excited to talk stablecoins. I know we want to touch on just like what's happening in the markets and with Bitcoin and ETF flows as well. So we'll touch on that to kick this off. But yeah, excited to get started.
Amazing, Michael. Just before we go ahead further, when you were describing that there is a big difference between the choice of blockchains to be used with the West and in the East, when I refer to East, it's Asia basically. And you're right, it's like 4.5 billion people approximately, with majority of them among the area where China and India is there, the two most populated countries. I think the other reference point over there is that both these blockchains like Binance and Tron, they all are, the founders and the team are majority Asians. And I do not know whether there is some cultural preference as well for regions when they choose their blockchain of choice. I do not know. I haven't done research about it, but that's also another interesting, observation. Wouldn't you say?
It is. It's something I was thinking about too. As I was doing some of this analysis, you have CZ is the sort of face of Binance, which is one of the largest crypto. It is the largest crypto exchange, and also has the Binance chain as well, BNB chain. And then of course, Justin Sun is the face of Tron, which is I think the number 11 crypto network by market cap today. So yeah, that is interesting to me. It seems that that's where the Asian market is coalescing around those two major blockchains. So yeah, could be playing a role, and just consumer preferences, I guess, with demographics.
Exactly. So why don't we start with a quick update on Bitcoin? We've seen some interesting inflows and miner selling activity, which I brought up the question And I know you've got some amazing insights to share about the miner selling activity as well. So, what's your take on this? And why should our viewers be paying attention to these BTC inflow data, which we are regularly showing week after week now?
The Bitcoin ETF has just been wildly successful. I think, I'm becoming even more bullish on this. And I think, we did that episode with Juan Leon from Bitwise Asset Management a few weeks back, and people should check that out. But Bitwise is one of the issuers of the Bitcoin ETF, and we asked Juan, what are your projections? Like they've obviously done a ton of analysis on what they think the projections are going to be for their particular product in terms of inflows for the year, but also just in terms of the entire Bitcoin ETF, all 10 of the issuers. And Juan told us that they were projecting around 2 billion to 8 billion of inflows for the year for all of the ETFs. So last week we had $2.3 billion of inflows into all of the ETFs. So we are up to, it was a big week. That's not like the average of what we've seen since this product came out, but we are now up to almost $5 billion of inflows. And he did mention, they were sort of increasing their projections to 5 billion to 15 billion. Okay. So for the year, this was just a few weeks ago when we talked with Juan. So pretty interesting that we're seeing this much. That's net inflows too. This is factoring in the GBTC outflows. It's very bullish. The question is, and we don't have the data to say are these people that would be buying Bitcoin anyways on Coinbase or Binance or something where they have access to these US-based spot ETFs, are those people now buying it through their brokerage account? I tend to think no. I think these are new buyers. Maybe on the margin, there's some people that are doing that. I think these are new buyers that just find it easier to purchase the asset through their brokerage account or through their 401k or whatever through Fidelity. So it is sort of like this net new buyer out there. So yeah, curious to get your thoughts. I want to touch a little bit on the miners. We mentioned last week that miners were selling. We've had all of this buying activity, which you would think almost wow, how is the price not actually even going higher than it is? And it's because I think we're being offset by some selling activity from the miners. So you can jump into that real quick if you'd like. But yeah, I would love to hear your reaction to just these numbers are just astounding.
Yeah, just quickly. So I remember during that amazing episode, and all of our viewers on different socials, if they are hearing, they should definitely check out our episode 13, where Juan came, and it was really insightful, especially for the international audience, on what Wall Street machinery is doing with the financialization of these Bitcoin asset classes. And so, yeah, it was very insightful. And I remember telling him when he was telling that, our initial projections, they were just thwarted. And it's so positive. I was like, you should just expect the unexpected, mostly in the positive end. And it seems like it's just continuing on. One more thing, I looked into some research, a few days ago, and it seems like, although I'm not suggesting that there is a correlation between it, but just an observation from my side, one of the statistics that I noticed was that there has been outflows from gold ETFs recent. And a lot of people on crypto Twitter are now validating that we told you that Bitcoin is the better version of gold, digital gold, which I also believe. But I'm not quick to jump that the outflows on gold is because of the inflows in Bitcoin. I wouldn't be surprised, but I'm not quick to jump on it just purely by looking at these two charts.
Yeah, I have seen some charts on that too. And yeah, there have been outflows. Is that correlated to the Bitcoin ETFs and money going in? Who knows? You'd think maybe, but yeah, that's interesting. And to me, I totally agree with you on the whole gold thing. I historically have been somebody who's held on to gold and gold ETFs, but I no longer do. I'm just purely in Bitcoin now. I think that's the asset that if you're a millennial or a generation younger, that's the one you're probably going to invest in if you're looking for a hard money asset. I don't think people are going to be looking at gold into the future. We'll see.
Just before we go to the miner activity, just because we touched upon consumer preference as well, I think for people like you and I who've been in the crypto ecosystem since 2016, I remember when I went to NYU, the first 2 weeks, our professor, he came up with the chart, and this was in 2020, pre-COVID, that a survey was done in the US, and people, they trusted Bitcoin more than the banks This was pre-COVID 2020. And I think that if that survey was done consistently among the millennials and younger generation, that would hold true that they trust Bitcoin a lot more than banking brands. The most trust was amongst, the Apple and Netflix and Googles at that time, but Bitcoin was more trustworthy than the banks. So consumer preference comes into play again, because in that chart, gold was nowhere. So now that there's an equivalent, version of an ETF available, you would see more new money flowing into that ETF than gold. So to be honest, it's not a surprise for people like you and me, but for the viewers out there, it's just one of the big takeaways that consumer preference and demographic change, even in investments, are so important. Otherwise, Warren Buffett famously bought IBM stocks, and then he regretted buying those IBM stocks because they didn't perform well. And he only bought Apple stock once it reached a certain criteria, according to him, that is generating a lot of free cash flow, as opposed to seeing it as a growth stock.
Yeah, I agree with you on all of it. And I think it's almost like people should realize that these crypto networks and protocols and things like Bitcoin, there's a brand to that, right? Like it's this sort of, decentralized, and there's no sales team or no coordination around marketing or anything like that, but it is a brand and people like that brand, right? That's almost like, it's almost that simple. But yeah, let me just pull up the mining activity that we've seen with miners selling more recently, and really what I'm honing in here. And apologies to the people that are listening to this. Again, we pull up a lot of charts, so the YouTube is great to just get the visuals, but I'm just pulling up a chart here showing Bitcoin miners who really started selling pretty aggressively starting in like mid-November of last year, which is really when we were seeing some interesting like new price discovery to the upside. And we've continued to see that, all the way into the first quarter here. And we've seen this like period where it's really consistent selling from the miners. We brought this up last week, we were kind of hypothesizing that might be just treasury management. Like why are the miners selling? Like what would possibly be going on there? Now that we've been through a few different cycles, and a lot of these miners have been around for multiple cycles, at least the big ones, to me, it makes sense that there's some treasury management going on right there. If you think about it, and your revenue is about to be cut in half with the Bitcoin halving coming in just a few months, it makes a ton of sense to me that you would sort of position yourself to sell some Bitcoin, because I'm sure they're expecting that revenue to come back. If we're in a bull market and the price doubles, now you're back to even, but you have to wait from 50,000 to 100,000 to get that revenue back. So I think that's what's going on. They're sort of kind of like shoring up their treasury so they can meet all their obligations. What's very bullish about that to me is that, we've got these inflows coming into these ETFs. It's just, there's so many buyers out there that the price has just continued to rise, or at least sort of gone sideways a little bit here over the last, week or so, despite this selling activity from the miners. So it's making me pretty bullish, I would say.
If you're bullish, Michael, I'm bullish. And none of this is financial advice. It's just Michael and Shiv's opinions over here. But yeah, look, I just want to say at this juncture, just quickly, that a lot of students watch our podcast, as you know, Michael, and not just business students. There are a lot of students who are executives in Wall Street, in Sydney, in Mumbai, that watch our podcast because they want to upskill themselves from TradFi to crypto. And we ask questions like I asked you last week. We didn't have a response, but you came back the next week, and now you got a good response, and it's a great insight. This is the golden nugget that is so valuable for people who watch the podcast, who hear the podcast. So I totally agree with you. I didn't think about it, but that's a great insight right there. So thanks for sharing.
Yeah, absolutely. And I guess before we move on to stablecoin, just one final point on this, like something I've been thinking a little bit about, and just like I always try to like observe my behavior as I came into crypto, and like what I was observing, and like what made me decide like, okay, it's time to buy Bitcoin. And like, I'm sort of thinking through like just a lot of my friends and stuff who have been on the sidelines with crypto, haven't been involved, haven't paid attention to it really. But obviously, if you're somebody who works in finance or tech, and you're sort of like, you're paying attention to the markets, you may not be actively investing every day, but you're paying attention, and you're probably seeing that Bitcoin's back up over $50,000. If you're kind of being honest with yourself, you have to look at it and say, well, Bitcoin just survived FTX, it survived Terra Luna, it survived these attacks coming from like the SEC and just everything we saw last year. And now we have an ETF and the courts kind of had their say. You just have to think like, and then you look at the macro setup and like the halvings coming and like, it's just, you have to wonder what's going through these people's minds. And I think that's where you're seeing a lot of this purchasing through the ETF, where it's just really easy to buy it. It's kind of a no-brainer decision, but we'll see. Are you seeing, I'm curious from your perspective, just anecdotally, you know, you've been through these cycles, you've seen interest come back. Would you say you're seeing that? Like, are your friends that maybe aren't into crypto, are they like asking you questions just yet or kind of?
Yeah. So look, I'll tell you, definitely since the Bitcoin ETF, not sure about all the other altcoins, even though, you know, when we look at the prices, pretty much all the altcoins are also skyrocketing at the moment. But yes, among the TradFi executives and among the high net worth individuals between India and Australia, there is a lot of talk, there is a lot of conversation about getting exposure to Bitcoin, you know, either through these ETFs, through their brokerage accounts, through their US brokerage accounts. And the same thing in Australia. Australia is a little bit more pro crypto than what India is. So over there are investment vehicles through which one can get an institutional exposure to Bitcoin and Ethereum at least. So at least for Bitcoin and for Ethereum, a lot more conversation is happening and a lot more high net worth activity is happening, which compared to the previous cycles, if you ask me, didn't happen. So this is the first time that I'm seeing that really high transaction volume of inflow is happening, as opposed to previously where it was more retail driven.
Well, yeah, anyways, I'm bullish. I don't want to get too bullish, but you know, the setup continues to look pretty good and I'm kind of excited to see kind of where things go. We talked a little bit about where we thought things could be towards the end of the year when we did our predictions. I'm starting to move some of those up a little bit potentially. So we'll see. We'll continue to monitor this as we go. But yeah, why don't we jump into some stablecoin?
Absolutely. Let's move to stablecoin. I know that they are crucial for the crypto economy, but let's break it down one by one because the last 1 week you've been doing heavy research on stablecoins. Tell me, Michael, for our viewers, why are stablecoins so important and how do they differ from traditional credit card transactions to start? Just so that they get an idea right from scratch, first principles. Credit card transactions, they're aware of it. What are stablecoins? Why is it different?
Great question. I might just take a sort of a step back and then we'll get to the breaking down kind of the credit card transaction versus stablecoin. But I think like the things that are interesting about stablecoins, I'm hoping that this starts to happen, but I want to start calling them crypto dollars. And I think that's where the nomenclature should ultimately land stablecoin. It's just we are so bad in the crypto industry at like coming up with different nomenclature. So not a big fan. Stablecoins, but I think this is ultimately going to be talked about like crypto dollars, which to me is just the next iteration of the euro dollar market. I really think that's what stablecoins represent. And people that aren't familiar with like the euro dollar market, there's more dollars circulating outside of the US banking system abroad than there are US dollars circulating within the United States and the United States banking system. And this is a story that goes back to the 1950s when these Eurodollar markets initially were stood up. And the reason they were stood up is there was just intense demand for US dollars outside of the system where they can kind of transact more freely. And so banks started issuing US dollar denominated liabilities. And that's really kind of what birthed this Eurodollar system, which has over $20 trillion in it currently. And so when I think about what is the Eurodollar? What is a stablecoin? They look the same. So stablecoin, again, is just you're issuing a dollar-denominated liability by a non-US regulated entity. So what is a Eurodollar? It's a bank issuing a dollar outside the US banking system. What is a stablecoin? It's somebody like Tether issuing a dollar outside the US banking system. So very similar, really being birthed through that same story where there's just a demand for dollars and to be able to transact freely. So these are solving a lot of problems. I think stablecoins initially were solving problems for exchanges and the way that they were dealing with clients and people that were trading on exchanges with having a lot of difficulties going between the fiat system and bank wires and ACH payment. And then, the on-chain system where you're really kind of separate from that. So that's really kind of, I guess, the founding story or kind of why stablecoins are popular and why they're proliferating. Tether is under $100 billion of market cap. I think it's about 97 billion. It's at an all-time high currently. And then USDC is the other top stablecoin. These are the dollar-backed stablecoins. These are non-algorithm. We're going to focus on just dollar-backed stablecoins. For the sake of this discussion, USDC is about $27 billion. That is about half of what its peak market cap was. So about $125 billion or so. It's less than 10% of, significantly, maybe closer to 5% of the crypto market cap, but it accounts for about 70 to 80% of transactions on public blockchain. So stablecoins are the killer use case for public blockchains. That is what public blockchains are primarily being used for, is dollar payments. This is a pretty interesting, sort of discovery. And, what does that mean for the US dollar? How should regulators be thinking about this? We saw just last week, there was a Fed governor who came out and said, hey, the proliferation of DeFi is good for the dollar, right? Because these are dollars. The 99% of the stablecoins that are circulating are backed by US dollars and US dollar-based assets such as treasuries. So that's kind of the backstory, I guess, of these things. And now I want to get into the sort of detail of why they're interesting from a technical perspective. But anything you want to add there?
You know what? There are certain subjects that don't get enough credit for shaping up the intellect of a knowledge professional. One of them is history. And whatever you were telling me just now, I was like, I'm sitting in my apartment doing research and writing my book on the history and evolution of money. Because yes, euro-dollar, after the Bretton Woods system became such a popular, concept, and demand of US dollar came a lot. So you explained it very well, Michael. You can become an economic history professor as well, in addition to being an on-chain finance professor. So all the universities out there, Michael Nadeau, his contact details out there. But just quickly on what you said, I'm interested to pick just one of the statistics that you mentioned, which I wasn't really aware of. You mentioned that 70 to 75% of transactions being done on public blockchains, irrespective of the public blockchain, so it could be Ethereum as well, is stablecoin transactions. Oh, wow. So can I just confirm, are we saying that some people transfer the Ether as well from their wallet to somebody else's wallet? Not smart contract transactions and all that, but just payments from one wallet to another person's wallet using Ether as the currency. Or let's say in Tron, somebody would be using TRX to transfer from their wallet to another wallet. Are we suggesting, using the statistic that you mentioned, that people are using Tether or other stablecoins more than the actual native currency or crypto asset of that blockchain when they are making payments or transferring something of value from one wallet to another?
Yes, that is the key takeaway here. And that tells you is that Bitcoin as a currency we are not seeing that actually play out as Bitcoin being used for a medium of exchange for payments. It's being used more for a store of value, similar to how gold is used. People don't really transact gold. And what people want to hold dollars, they want to transact dollars, they want to hold these other assets. There are certainly reasons to hold Bitcoin, to hold Ethereum, and there's utility to those assets. But what we're seeing is that there's just immense demand for dollars on public blockchains as the medium of exchange. And I think even as a store of value, honestly, in some of these emerging markets that have currencies that are inflating at really high rates, they would rather have dollars, and they understand the dollar, and they don't have to worry about the volatility of the dollar. And so it just makes more sense for them to seek dollars, I think, in some cases, more than Bitcoin or other crypto assets.
Wow, another great insight exclusively on the rundown, thanks to Michael. Michael, now we can move on to the technical thing that you wanted to discuss.
Okay, so I want to just go through, this is from a presentation that I saw, but I want to just go through sort of a step-by-step process of how the credit card transactions work today. And then we'll compare that to how a transaction peer-to-peer stablecoin payment works. I think that will help people sort of see why this is going to continue to proliferate. All right, so this is actually a section we wrote about this in the Ethereum investment framework, and this is essentially goes through the process on the back end when you're at a merchant and you go to pay for something with your credit card, right? So you're at the store, and we have all these fantastic payment solutions today: Stripe, Fiserv, Square. You swipe your card, and then what happens? So typically what happens is the merchant then has to send you're buying payment information to a card acquirer network. That's like the second step here after you've swiped your card. That's typically like a Chase payment tech or some other like third party that's essentially receiving your information as a credit card holder. And then there's another step here. So then the next step is that entity then sends your information to the card network, which then passes it through to the insurer bank. And that's where the consumer's credit card is tied back to. So now essentially the bank is confirming to the credit card processor and the payment processor that you have the funds, right? So that's the next step is the bank checks, see if the person has enough money or credit, and then the card issuing bank transmits the information back to the card network. So these are all steps that are happening that we have to pay for that has created, inefficiencies. So the next step here is the card network then transmits that information back to the card acquirer entity. Card acquirer then sends the information to the payment service provider. This is Stripe, Square, FIS, and then the payment service provider transmits the information back to the seller, and then the payment is processed. And then that's not final settlement, right? So now that's essentially the accounting. So the accounting's kind of been done, and then the banks actually settle with each other, and that typically takes 2 or 3 days. So you've got all these different entities involved in all this. Each one of them, has their hand out looking for a fee here. And in total, the intermediary fees can be up to like 2.6%. Most of that 2.6%, I think people assume that that's the credit card issuer, such as like Visa or MasterCard. It's actually mostly going to the banks. They're taking credit risk when they, allow people to pay with credit cards. So there's a fee to doing that. And so the banks, they're capturing most of the inefficiency in this system, kind of what I would say. This is really an accounting problem, and the fact that the user is not in custody of the assets. And this is going to become very clear once we go to the stablecoin payment. Yeah, get your reaction to that.
So look, I worked in a bank in Australia for 2.5 years, even though it was in the wealth management division, but I knew a thing or two about banks. And it was the second largest bank in Australia, National Australia Bank. Credit cards have been one of the most profitable products for banks for decades. And it's only now, if we talk about US, the advent of the Cash App, let's say, or online payments. And in Australia, there was Afterpay. So a lot of these online infrastructure that doesn't really require you to use Visa or MasterCard network, they are now giving credit cards a run for its money. And this is where I want to bring up, I'm interested to get your take, because FedNow has recently been introduced in the US as well. So India created a unified payment infrastructure called UPI. Have you heard ever about UPI, about India?
I have. I don't know a ton about it, but I've heard about it. Yes.
I tell you what, and Michael, you and I are friends. You know that I talk about India very reasonably, as in not too bullish about it, but also not too bearish about it. You know that? But I have to say one thing. The UPI system of India is truly world-class and just unbeatable when it comes to any other payment systems that I've seen, including in US and in Australia. And what that does, it basically does all this settlement in less seconds than what a credit card transaction does, without any cost. There is a cost associated, but because UPI is developed by the government of India and the Central Bank of India, called Reserve Bank of India, they basically subsidize the cost for the other technology providers. So I do not know how much familiar you are with FedNow, but during my initial architectural study of FedNow, it seemed like it was a version of UPI. I'm not saying they copied UPI, but they took a lot of learnings from UPI and other central bank issued payment systems to develop FedNow. I'm interested to get your take about FedNow, and what do you think the role of stablecoin is going to be in a world where FedNow payment services will be more prevalent? Because that's what the Federal Reserve Bank also wants, if I'm not wrong.
Yeah, and I think FedNow came out with a huge upgrade to that whole payment system last year, if I'm correct. I haven't looked into it recently, but from my perspective, it was an upgrade similar to kind of what you're saying, technology upgrade, not using public blockchains or anything like that. I don't think it even uses a private blockchain, but it's really like an upgrade to the system just to be able to take payments like after business hours are closed, which was just ridiculous that we couldn't do that. So I think it's allowing, faster payments and then potentially 24/7 payments. I don't know a ton about it, to be honest, and how that factors in. That's not related to like, there's been discussion about potential CBDC, in the US. And I don't believe FedNow that's related to that. That's just more the payment system. I think this actually leads into a discussion. I think we should talk about this in a minute here of like private blockchain versus public blockchain, like these sort of closed systems versus this more open system. But just to finish off sort of what we were just mentioning there with all of these different steps that happen with a credit card, there's a number of entities involved there. Each one's taking a fee that adds up to like 2.6%. And that's, the merchant is paying that, right? So, and it's really being passed. I mean, yes, the merchant's paying it. They're most likely passing that back to the consumer. So if you think about 2.6%, if you can take a big chunk of that out, I mean, that is it seems small, 2.6%. But if you think about payments and how much economic activity is happening around the world with credit cards, I mean, you can create a lot of wealth just by stripping that out and returning it people. So that's one interesting thing. Now, if we go to a stablecoin payment, there's 3 steps. There were 9 steps to the credit card. The buyer has to already have stablecoins preloaded into their wallet for this to work. Obviously, if you were going to make that same payment, again, I'm at the store and I'm at the point of sale. I'm going to essentially just load up my wallet. I have my counterparty's address. I send a transaction to them. It debits my account, credits their account. There's no intermediaries. We're using a public blockchain, all the accounting for that being handled on the public blockchain, and we're done. There's nothing else there. And then the settlement is transparent, and you can go and look at a blockchain explorer. You could, it's all there. So the estimated savings for that are 2.4%. And the reason for that is there's no card network, there's no bank, there's no payment service provider, and there's no 2-day settlement. That's really what this comes down to. So to me, once you kind of grasp that, and then you think about, why is this the case? It's because the user is controlling the assets and they're sitting in a digital wallet that they have access to. And that's the key thing. So you cut out all the middlemen when you allow for that. And then you're using a public blockchain, which is I like to call them global accounting ledgers. So now we can transact anywhere in the world. We can do e-commerce, we can do cross-border payments. And so that's sort of, to me, it's very obvious that this is going to be the payment solution moving forward. And we just need regulation and, a little bit more maturity in the space to get there.
Before we jump into other further topics, I just want to make one thing clear, at least from my perspective. When you're mentioning that the estimated savings is 2.4%, you actually mean that the cost can go up to, for credit cards, to 2.6% of the transaction amount. And over here, it can come down to 0.2%.
Yeah, exactly. I think there's still going to be a role to play. The question is, and this can even go up to I think 2.9% in some cases with credit cards. To me, the question becomes who is really the entity that's sitting in the middle of this, that's not providing a ton of value, that's charging the fees. And I think the credit card or the payment solution providers are still going to have a little bit of a role here. I do still think you're going to have a Stripe or some sort of payment processor, obviously, and that's not going away. But what is going away is all of this checking between the credit card issuer and the bank and all the back and forth there. And so to me, it's the banks that actually lose here, because they're the ones that aren't really adding a lot of value to that process, and they're taking the most fee.
Absolutely. I mean, 2-3 days to settle, when in the day and age you can get things settled within a few minutes. So yeah, I totally agree with your assessment there.
And real quick, just to show that, so if you did this is USDC on Solana, if you did a stablecoin, point of sale purchase, and you were a nerd like us and you wanted to see the settlement, you could just go here and you got all the details. And this happens every fraction of a second. You have transactions settling to the blockchain. We can actually view the settlement activity and what's happening on chain. So, we'll see. There's been some reports out recently that lawmakers are getting close in terms of a potential bill around stablecoins in the US. This is really much needed, because we're going to talk a little bit about Tether and Tron. We sort of think that we're seeing this offshore unregulated markets continue to grow, whereas USDC and the more regulated markets are actually shrinking. We think this is because of lack of regulation, unfortunately.
Just quickly, Michael, I love that you got the Solana Explorer out there so that we can visually see the transaction. It's a bonus point for all the nerds who are definitely watching this on YouTube, where Michael shares all this nuggets of information with us. And for the people who are listening to audio, come to YouTube, subscribe on YouTube to watch all this thing. So just quickly, for the non-nerds who are watching our podcast, who always ask, when are we going to see actual real use cases of stablecoins? When are we going to start transacting on e-commerce websites using USDC or Tether. I know Shopify has got like a plugin or an integration where you can use stablecoins as part of their checkout process, but it hasn't really hit off. And I've spoken with some of the payments executive within crypto companies, and they are of the same opinion as well, that e-commerce has really not started using stablecoins. My question to you is, when do you think we'll start seeing online shoppers using stablecoins as part of their checkout process?
I think as soon as we get this regulation, I think the major e-commerce providers, I know Shopify is trying to do some stuff with like Lightning as well on Bitcoin. I just think there will be a tipping point where the technology gets to a place of maturity and scalability and safety. You know, even a lot of the wallet providers need to really improve. We need like insurance on wallets, and like almost everyone needs a wallet loaded up with some stable coins on it, and then it would make sense for all these e-commerce providers to actually offer that as a point of sale. So it's hard to project these things, but it's very clear to me, and I've been using like USDC on Solana. It's just like, it's unbelievable how good of a product it is, that if I had the option, I can tell you this, if I had the option as I'm doing my e-commerce shopping to use USDC on something like Solana, where transaction settles almost instantly and at very, very, very low fees, less than a penny, I would use Solana to do those transactions. Matter of time. I think we're years away from it really becoming like this mainstream thing. Right now, it's primarily, I would say, emerging markets. So you mentioned like, you know, when are we going to see this really take off in terms of just e-commerce payments where everyone's got a wallet and it's really seamless to just like pay with your wallet? One of the things that I've been trying to figure out as I study what's happening with stablecoins on public blockchains is, how are these things being used? And this is actually a report that Brev and Howard put out, and they got really granular with some of this data. And they've got data to show that 34% of the active addresses that are transacting weekly using stablecoins are doing that in volumes between $1 and $100. So I think there's this view from especially the skeptics when they look at, you know, when crypto, you'll see like this get reported on social media and through the media sometimes, where stablecoin volumes are starting to get close to Visa, right? They're becoming like in terms of the 365-day volumes, I think over 11 trillion last year. So getting very close to Visa. And I think there's a view there that, well, that's not the same as payments because it's probably crypto traders, you know, and that's really what that volume is coming from. And a lot of this data disputes that. And it says, well, a lot of these active addresses are transacting very small amounts of stablecoins. And so that's interesting. We need to even go deeper on what that means, because I don't think it's necessarily e-commerce like we're trying to figure out now. Is it more remittance payments in emerging markets? Like what's going on here? But that's an interesting stat, that the majority of the active or 34% are transacting very small amounts. And then the next most active bucket is transacting between $100 and $1,000. So still pretty small amounts. And that's 32%. So over 2/3 of, you know, active stablecoin users are transacting pretty small amount. And then you certainly do have the traders and stuff as well.
I think this is a great episode. We covered a lot about stablecoins that one can cover within the small period of time that we have. I know the next section that we're going to go off to is always buzzed, especially among crypto Twitter, which is around Tron. And I'm excited to dwell deep into it, especially on this podcast, because, you know, we always focus on crypto fundamentals using data. And I know that there is a different narrative out there, which we have spoken numerous times privately as well, about the Tron blockchain. So I'm really excited of what we're going to present about Tron using Token Terminal eventually. But before that, I know you've done a quantitative and qualitative analysis about Tron as well. So excited to dig deep into Tron now, brother.
Yeah, let's talk about some Tron. I've got some stuff on Ethereum. So I sort of divided this out where I want to show what's happening on Ethereum, and then we're going to go to Tron, and then we're going to go deep on Tron. We'll go on chain and we'll go deep into Tron. So hopefully in the next 15, 20 minutes, we'll have some good on-chain data. So all right, so we're starting with Ethereum. So we are going to get to Tron. I just wanted to break down here, like, what are the top stablecoins on Ethereum today, and what could we sort of glean from this? I think the major takeaway here, and what we're looking at here, is just the outstanding supply of stablecoins, and we have it by stablecoin, right? So there's almost $45 billion of Tether. Tether in total has over $97 billion outstanding. So you've got nearly half of that is on Ethereum. And then the number 2 competitor is Circle. That's USDC, and that's just south of $25 billion. Circle, I believe, has about 27 billion in total. So you can see that Circle and Ethereum are sort of paired together here. Ethereum is sort of like the US dollar stablecoin thing with USDC. And then in the Asian market, it's really dominated by Tether. And we're going to get to Tron, and that's really where we're seeing that. But I think one of the takeaways is just, we talk about power laws in crypto and on public blockchains and how there's always 3 or 4, winners. And we see the same thing with stablecoins and Ethereum in particular here, where there's essentially Tether and USDC, and then MakerDAO is number 3. So MakerDAO does have about $5 billion of outstanding stablecoins on Ethereum today.
And that's an algorithmic stablecoin, right? The MakerDAO.
That is, it's not algorithmic, it's crypto backed. So it's not backed by dollars. It's not algorithmic, but it's backed by Ethereum and other crypto assets. So it is over collateralized. It's not like this algorithm. It's not the same as Terra Luna. It's crypto collateralized. They do also lend against, real world assets and like USDC. And so there's a mix here. We talked about that a few episodes ago with real world assets. But yeah, MakerDAO is a little different, that it's not just purely backed by US treasuries and US dollars. But there's really 3. That's really it. You get down to Frax as number 4, and there's just a massive drop off in terms of the actual outstanding supply. So that's I think the takeaway when you look at Ethereum is just same rule that applies to every other crypto network and protocol is applying to stablecoins. And you don't see PayPal issued a stablecoin on Ethereum, and we are not seeing, there's very little activity on that today.
For me, what is surprising when I see this chart, that I'm not seeing the Winklevoss twins Gemini USD here. Are you surprised about that as well?
Yeah, I haven't looked at that one to see what's going on. I mean, what happened, I think, last cycle was that it became clear how incredible this stablecoin business model is, with everyone who saw how much money Tether was printing. And so you basically saw every DeFi protocol and every centralized exchange went out and issued a stablecoin. So there's, this is a DeFi protocol. There's Curve issued a stablecoin. There's been a bunch of them. Aave issued a stable, that's a lend borrow. So they all issued a stablecoin because they saw that this is just a very profitable business model. I think a lot of exchanges did as well. You had Gemini issued one. USDC has ties with Coinbase. There's a there's a partnership there. And then you've got Binance, of course. Binance has, I believe, their own stablecoin. Tron also issued USDD on Tron. So it's a profitable model, so it's obviously going to be copied, but the power laws do sort of hold. And so you're going to have that long tail, but really only 3 or 4 major players, I think. So just moving on here real quick to just looking at 365-day volumes. Again, Ethereum only. Circle has more volume than Tether currently on Ethereum. So it has less outstanding supply, almost, let's call it 60% of the supply, but more volume. So just means that the transactions that are happening on using Circle on Ethereum are larger transactions than Tether. But again, same 3 players show up here: Circle, Tether, MakerDAO. In terms of token holders, how many unique wallet addresses are interacting with these stablecoins on Ethereum? Tether has a little over 5 million and Circle has just under 2 million. And then you get down to MakerDAO and it's just under 500,000 for MakerDAO. So still small, I would say. There's much larger. We'll get to Tron and the numbers are much bigger on Tron. But yeah, less than, in total across the top 3, you've got less than, 10 million stablecoin users today. In terms of average transfer value, so this is something I've been trying to, we just talked about how 34% of the transacting addresses are transacted between $1 and $100 per week. So pretty interesting. This is really just more taking average, which is probably not the best way to look at this. It's taking all of the volume for the year and then just dividing it by the number of transactions to get to just an average, which is not really representative, I guess, of some of that more granular detail we just talked about. But interesting that MakerDAO has the most volume, which is kind of in terms of average transfer value, not volume, average transfer value. And Tether and Circle are way farther down the list. So Tether is used, for more smaller transactions, kind of the takeaway here. And I have no idea why MakerDAO's average volume is almost $450,000. It must be DeFi activity or whales, something like that, but kind of an interesting little point there.
$450,000
average. Yeah. I mean, it's the average. So you probably have a few whales that are just doing tons of transactions, and that's sort of skewing the data a little bit, but that's a big number for sure.
Still a lot. Wow, like these are some interesting insights. I wouldn't have pictured it. I would like to still continue seeing before I give my words.
Sure. All right, so now I'm just gonna share some stuff. This is Tron versus Ethereum and looking at Tether. This is just Tether token holders on Tron versus Ethereum. We've got about 37 million Tron Tether holders on Ethereum. Only, we just mentioned it as well on a previous chart, just over 5 million on Ethereum. So Tether in particular is very popular on Tron, not so much on Ethereum. And there's very little Tron activity on other blockchains. So if you look at Solana is primarily USDC. We will get more Solana data related to stablecoins, probably in a future episode as well. But yeah, Tether is primarily a Tron phenomenon, which is interesting. So here's another comparison. So we've got average Tether transfer value. This is Tron versus Ethereum again. And again, we mentioned that the average transfers on Tether looks like are much, much lower than Ethereum. And we can see that here, like someone's using Tether on Ethereum, the average transfer value is over $30,000. On Tron, it's a little over 5,000. And we know a lot of these transactions are much smaller than that when we just look at get a little more granular with the detail, with the data here. In terms of outstanding supply, Tron is, this is, again, Tether only data. We've got just under $52 billion of Tether on Tron and right at $44 billion of Tether on Ethereum. So still more Tether on Ethereum than Circle. That as well. And then in terms of 365-day volumes on Tron versus Ethereum, again, this is Tether data. The volumes on Tron are getting close to like $4 trillion of Tether on Tron. We mentioned is about 11 trillion. So just Tether on Tron is starting to get close to like half of the global Visa network, which is pretty interesting. So Tether just on Ethereum, about 1.5 trillion over the last year or so. So pretty significant numbers. Ethereum, if you were just looking at the top two here and you're looking at 1.5, 5, like almost 6 trillion of volume just over the last year or so. All right, so final chart here. Sorry, we're going pretty deep on some of this data. But again, we're just looking at the average fee per Tether transaction now by blockchain. So this is kind of interesting. We don't have Solana on here just yet. We know Solana's would be sort of down here, like less than a penny where Polygon is. But it's interesting that, the two chains that have the most Tether activity actually have the most like cost per transaction. So the cheapest block, again, the best tech or, doesn't always win. And like, that's kind of what this is telling us. Like for whatever reason, there's just network effects around Tether on Ethereum and Tron. People are willing to pay over $3 to transact Tether on Tron, on Ethereum, and over $1 to transact it on Tron. I mean, that might be surprising to people. I think there's this perception that Tron is like this super fast, cheap blockchain. It's kind of somewhere in the middle between Ethereum and some of these other layer 2s and Polygon. So the best tech doesn't always win. The best network effects, liquidity network effects certainly do. So that kind of tells you something there. Why don't we hop on chain? I want to get into a little more detail on Tron as we wrap up the show here. And I think it might be time to hop into the terminal.
Mike, is this time now to go on chain?
I think it's time to go on chain. I'll see you over in the terminal. All right, so this has been a, action-packed episode so far. I want to just wrap this up. I've got a report coming out, or went out this week to readers of the DeFi report. We covered Tron. As I mentioned, like we've primarily done most of our analysis within Ethereum. We're getting more involved with Solana. We've done a ton of analysis on Bitcoin. I try to stay just as open-minded to everything that's happening in the crypto space. And one thing I've been thinking a little bit about is just the fact that there's 4.5 billion people in Asia. And what we're seeing in terms of like activity on public blockchains is that there is a preference amongst, that part of the world to be using blockchains outside of the ones I think that in the West we think are the automatic winners. And so Tron is one of these blockchains. Tron is number 11 in terms of market cap today. It's got a little bit of a backstory with the founder. Justin Sun is kind of a notable figure, I would say, in the blockchain space for over 10 years or so. He worked at Ripple before he started Tron. And Tron was one of the blockchains that emerged like right at the peak of like the ICO mania in 2017. So they raised an ICO and there was a bull market, and Tron has been really kind of bootstrapped ever since. We're going to get into sort of what's been happening on chain here, but I want to just pull this up because I think it's sort of off people's radar a little bit that Tron is actually like the #1 blockchain in terms of active users.
Wow. Nobody would have guessed that.
Right. This is coming back to Tether usage. And this is really what's driving this is Tether. And I'll get to Tether's percentage of the activity on Tron in a minute here. But yeah, this would surprise a lot of people that Tron is #1. It's got more, daily active users than Binance. And that's an interesting point as well, is that Tron and Binance are 1 and 2. These are the two big Asian, blockchains. Pretty interesting. You've got Solana and Ethereum significantly below, just in terms of like active users. Another interesting data point, again, Tron is up there with daily fees. So Ethereum does have more daily fees because the transactions are more expensive on Ethereum. So less users on Ethereum, but because the fees are higher, the total like economic activity on Ethereum is more, but Tron's #2, which is interesting. And then Binance again shows up in that 3 spot. Solana is below Binance at 4. So again, just kind of interesting that, we don't hear Tron talked about a ton, but it's #2 in terms of like total revenue. Moving on to like transactions, Tron is #2. So Solana is #1 in terms of total transaction counts. We don't have the Solana data. I do have some information that there's going to be a ton of new Solana data added to the terminal pretty soon, but Tron's #2. And then we've got Binance. And of course, I've just put, we can see how far behind Ethereum is. Of course, Ethereum is scaling on layer 2s and there's more transactions happening there. Yeah, I think the key takeaways are for Tron is just being used a lot by a lot of people. The next question is how? How is Tron being used? Is it being built out as this like developer network like Ethereum, where you have all these different like ecosystems and there's different use cases and there's all this experimentation happening? Or is it just primarily like this payment stablecoin blockchain? So I'm going to pull up trending contracts within the terminal here. And what this is giving us a view of is all of the various smart contracts. I call them business units within Tron. And we can see up top here is the Tether USDT smart contract. And when we look at the gas market share over the last 365 days, Tether is almost 92% of the entire activity on Tron. So that is significant. And is Tron trying to just be a payment network? I don't think so. Like when we went through and did all of our research, they have much bigger, ambitions than just being a Tether stablecoin network. Actually, after Justin Sun launched the blockchain and did the ICO back in 2019, they bought BitTorrent, which is, I don't know if you're familiar with BitTorrent, Shiv. It's like a peer-to-peer, file sharing network. And they wanted to essentially introduce like this network for content creators where everybody could own their data and share their data. This has not really taken hold. And you can see that here where the BitTorrent contract is number 19 and did much less than 1% of the activity on Tron last year. And like, we're just looking for like, is there going to be more use cases on Tron, or are they just going to like lean into Tether and just embrace themselves as the payment network for Tether? I think there's a lot of concentration risk there because Tether itself could be risky. And then you're tied to essentially one use case. If anything were to happen to Tether, that would be really difficult for Tron as well.
So can I quickly ask you, I think this research and statistics and on-chain analysis of Tron for a lot of people is going to come across as a shocker, as a surprise. For example, if I speak for myself, I know Tron back since 2017. I've been closely watching it since 2017 for a couple of years, and I was familiar with the buyout that Justin Sun had done using TRX for BitTorrent as well, and then eventually launching the BTT tokens with a lot of fanfare and a lot of price action. But eventually, as you can demonstrate as well, has gone down. But I don't think anybody has ever seen Tron or Justin Sun marketing that Tron blockchain is basically the #1 blockchain for Tether transactions. So my question to you is, in your research, did you see any sort of marketing like that? And if not, why do you think that they are not actively marketing that they are the best blockchain for stablecoins? When, in fact, if this would have happened on Ethereum or Solana, people would have gone on gangbusters to promote that, see, we are the best blockchain, because what it signifies is that they got the best blockchain with the highest turnaround time, lowest transaction fees, but Tron is not doing that, especially since it's 92%.
Yeah, it's a super interesting question. What I will say is that I agree with you that we don't see them speaking to this use case and really that using this in their marketing materials. I do see them, talking about their active users and the fees and things like that. I think part of the reason for that is they don't control Tether. So, Tether is a separate business. It's a very, very profitable business as well. And I think that actually the Tron Foundation is actually trying to compete against Tether. So they issued the USDD stablecoin, and then that's something that they control, and so that's what they want, the market talking about is their stablecoin and Tron itself, and not necessarily Tether, because they're giving, if they're talking about Tether, they're giving Tether free marketing, and I think they view them as a competitor. So I think that's probably the number one thing. But yeah, why don't we take a quick look at the revenues, because there's a few interesting things, and I want to talk about developer activity as well to wrap this up. So Tron has a few interesting concepts related to consensus mechanism, related to how payments are made on chain, that I want to kind of get into here, because I hadn't seen this on other blockchains like Ethereum, Solana, Bitcoin, etc. So users on Tron can stake their TRX tokens, and they're essentially locking those tokens up, and they can receive something called like bandwidth and energy. I don't know if you've ever looked into this. I didn't know about that this is how the blockchain was used. But you're basically locking your tokens. The question I had as I was doing this research was like, if I'm locking my tokens and then I'm receiving bandwidth and energy as a new resource that then I can use to have reduced transaction fees on the network, interactions with smart contracts, etc. It's kind of an interesting concept, because you're sort of forcing people to lock up their tokens. I think that's actually what they're doing there, is they're trying to get people to lock up the token, incentivizing them, say, hey, we'll give you free, transactions if you do that. And then that could be interesting in terms of price action if there's less of the supply is liquid. But to me, it's not a long-term, it doesn't feel to me like that's something that's sustainable long-term. Like when you lock up your tokens on Ethereum or these other blockchains, you're providing a service to the network to validate those transactions. Or if you're locking up tokens and you're putting those into liquidity pools and DeFi, like you're providing a service. That's why you're getting paid. That's why there's an incentive to do it. In this case, I'm not sure there's a service being provided. It's just lock up the tokens, and that's good for Tron and Tron token holders. So kind of interesting. They also burn 100% of the token. So I'm looking now at the fees and the revenue. So revenue is the share of fees that are burned, and the staking energy and bandwidth consumed by the users. So that is 100% of the actual fees. All of the fees are being burned. So not only are all the transaction fees being burned, but then you're incentivizing people to lock up the tokens, and then you're giving them this other resource, bandwidth and energy, to give them free transactions. So it seems a little like some funky tokenomics that I hadn't seen before. Like if on Ethereum, you could just lock your tokens up, there's no transaction fee. It's a little different. Hadn't seen this before. The other interesting thing when you look at this data is the cyclicality of the fees and the revenue, which we actually reached out to the Tron Foundation to try to get some insights into why this, why that might be the case. I haven't seen that type of like cyclicality to like the fees and sort of revenues or users. Didn't really get like a great explanation as to what's driving that, but it was kind of interesting observation just as we went through some of this data. I'll pause there before we get to like the developer activity to wrap it up.
Just quickly, like I don't want to mention these chains, but since you brought it up, there has been this Pulse chain, which was like just a marketing gimmick by this very famous YouTuber and influencer. And there was this token Hex Trust, which was, pitched by a lot of YouTubers again. And it had, I am not sure what the intentions of Tron Foundation is with this token economics. Yeah, it seems like very far-fetched, very complicated, and unsustainable, like you said. And as soon as you brought this chart on Token Terminal, I'm like, this seems more like an AI-generated chart to me. I know this is actual on-chain data. I'm not denying that. But it looks so cyclical. Like it's so good to be true that it's such a cyclical pattern, more like waves. So yeah, interesting on-chain analysis throughout. Let's see the developer activity.
We just report the data, so we don't know exactly what's going on. I would like to know like there could be a valid reason for this, but we'll see. We'll continue to monitor it either way. So I mentioned like Tether is the primary use case on Tron. And so not surprisingly, like Tron has lower, developer activity. And so like, if you just looked, I'll just toggle over here to, core developers. And, on an average day, you're seeing like between 10 and 20 core developers, which is pretty low for a layer one network.
Which has the most active user base.
With a very high active user base, exactly. And I think, kind of makes sense when you see that it's very low when you look at the trending contracts and you see that Tether's 92% of the uses, and there's not a robust DeFi ecosystem on Tron, and the BitTorrent network hasn't really taken hold just yet. So there's not a ton going on here besides Tether. I took it a step further, and we always like to just go into like the GitHub developer repositories, right? So these are public blockchains. The GitHubs are, these are open solutions, and you can see, the activity that developers are having on the network. And so we're looking at Tron right now, and we usually try to find the repository that's like the most popular one, and we look for red flags. Typically, is what I just want to basically see that developers are working, right? They're constantly updating the code, and you're not seeing a chart. But what we're looking at here is a chart that starts with lots of developer activity early 2018, which is right after they launched the blockchain, and then it sort of just slopes off to the point where there's like very little developer activity currently. And I think that makes sense, again, because of what we see on chain in terms of usage. Again, I think this is a bit of a concentration risk for Tron, that Tether is the primary use case and they need to sort of build out alternative use cases. You can also go in here and see individual contributors, right? And you tend to see like lots of activity early on and then dropping off later on. So always good just to kind of like take it a step further on a lot of the data, just to compare. Maybe people wanted to see what that looks like for Harrison Network. This is an Ethereum. This is their Solidity repository. So this is what a more healthy, kind of more what we would want to see. And we're just going in and we're looking at the various repositories and just making sure that code's being updated. Right. When we did that on Tron, we didn't see a lot of activity on Ethereum. I think there were 10 repositories that had been updated in the last hour when I was looking. And there were only a couple within Tron that have been updated in the last 2 weeks. So it just kind of shows you like what's happening in terms of developers. But yeah, that's it. I mean, it's an interesting analysis to look at these other markets, to see how these other blockchains are being used. Tron, obviously, there's a lot of users here. There's clear product market fit with stablecoins and Tether adoption. I did see Justin Sun tweeted out last week that they're going to start to be doing stuff on Bitcoin layer 2. I don't know if you saw that. So Tron is trying to, I think, potentially build a layer 2 and move assets over there. So we'll see. Something to keep an eye on. Always remain open-minded, and we'll continue to monitor stablecoin activity and also what's happening with Tron.
Amazing, Michael. So just quickly, because you've done some heavy analysis, and thanks for showing it for the rundown viewers over here about Tron specifically, do you have any opinion on how decentralized Tron Foundation is, or Tron blockchain?
Anybody can run a node, so it's permissionless. Anybody can run a node. It is a little bit, the hardware requirements are a little bit harder, which is typical of most networks outside of Ethereum. So anybody can access it, run a node. In terms of like how many of the nodes are there, there's definitely less, and I don't have the exact number, than Ethereum and Solana and some of these like more decentralized Bitcoin. So I would say, yes, these are more centralized. Same with Binance. Binance, I think, only has about 20 validators. So there's 27 sort of super representatives, they call them, on Tron that get to essentially approve the transactions that come through. So it's definitely much more centralized, and that number can kind of grow and evolve as well. So yes, I would say these Asian blockchains are a little more centralized.
Got it. And lastly, it's not like I want to start a conspiracy theory, but it's more like, as you say, stay curious, and I am a curious guy anyways. So it's more like a what if question, that do you see a possibility where Tron and Tether, because 92% is no joke, 92%, I think Tron Foundation clearly knows that they've got high concentration of all their activity happening using Tether. So that's a big risk item as well. So do you think there is a possibility that Tether and Tron, they have a pact in the back room that Tron is Tether's choice of blockchain for transactions?
That Tron is Tether's choice of blockchains? I don't know. That's one question I have, is like, because this really, the activity of Tether on Tron really took off in like 2022. So kind of in this last crypto winter. Why that happened, still kind of unclear to me. So I don't know. I don't want to make any assumptions as to what's going on. There's obviously a lot of Tether on Ethereum still as well. Obviously, the fact that Tether is using Tron is good for Tron, right? That's driving transaction fees and driving users and things like that. So they obviously want them there.
So you know what we should do? We should ask our engaged audience across YouTube, Substack, and X, formerly called Twitter, and on LinkedIn, as to what do you guys think, so that we get some public opinion, some subscriber opinion as well about what do they think, especially about the analysis and, just about Tron and stablecoins in future about it. So Michael, this was great. We've got a guest that is going to come out for next week, right, with us?
We do have a guest next week. I'll hold back on announcing the guest for now, but we do have a guest. He is coming from a VC shop, so we're going to get some really interesting insights in terms of what's happening in the public markets and also these kind of more private investments and like what's happening. Are our VCs coming back? Are we going to see another like influx of new money into the system? So yeah, excited to dive into and get that perspective next week.
Amazing, Michael. So to all our listeners and viewers out there, thank you for tuning in. This was our longest episode, I'm pretty sure. We hope today's episode provided you with valuable insights like every week that Michael brings into the table into the evolving crypto landscape and all the on-chain analysis that he brings out. So don't forget to subscribe for more deep dive and on-chain analysis. And if you like it, please share it with your friends, with your family members. It's good to hear, Michael, that your family members are finally getting into the crypto bandwagon. So it's a win for the rundown. Until next time then, Michael.
Till next time. Thanks, everybody. We'll see you next week.